Hi, so I'm Stephen Quinn. I'm President and CEO of Midas Gold. Liz is handing out copies of the presentation. The version you got here is just shortened, but the slides are in the same order, so just jump over if you get behind, and you'll catch up with where we are. So our project's also in Idaho. We agree it's a great jurisdiction to work in. It's a former mine site. You can see by the pictures here. And I'll give you the brief highlights. I'm going to make some forward-looking statements, so obviously be aware of that. Our capital structure, our largest shareholder currently is Barrick with 19.9%, who put in $38 million US last year. But we also have some convertible notes out that were done in 2016, and the largest holder of those convertible notes is Paulson. So the right-hand pie chart there shows the effect of converting those notes. So Paulson would become the biggest shareholder at 28%, and Barrick would go down to 13%, assuming they don't top up their interest. And those convertible notes are 0.05% interest rate, 7-year money. We're just under 4 years into that. And starting next year, we could force conversion or redemption, and therefore conversion of those notes starting in March next year. The project is located in central Idaho, so we're, Darren was up there in the north end at Coeur d'Alene area. We're further south in the central part. This is a former gold-producing area, produced about 1 million ounces historically, suffered from fragmented land ownership, and we cleaned all of that up in 2009 through 2011. Idaho has seen a lot of pickup in activity. You've seen groups like Integra and Revival Gold pick up former producing assets similar to what we did, and look at bringing those back online in the future. We did a PFS in 2014. The study is obviously getting out of date now. We've got a feasibility study almost complete, but just use this as sort of a benchmark to give you an idea of the scale of the operation. It's 340,000 ounces of gold per year. We have a 12-year life in the feasibility study with potential to expand that through conversion of inferred, which we've done some of. It's a relatively capital-intensive project because it's basically a big mine. $970 million initial capital, very low, long life, low sustaining costs. It's $600 an ounce. You can see the NPV IRR there on an after-tax basis. What's going to happen, obviously the tax rate in the US has gone down from 35 to 21, so that if nothing else changed, those numbers would increase because of the lower tax rate. What we're looking for in the feasibility study, and we've already published some guidance, or it's obviously publicly available information, is where we're seeing pressures on capital to some extent, seeing the effects of steel tariffs pushing steel prices up, and the strong U.S. labor market pushing labor costs up. So that's factoring into the capital costs. However, on the other side, on the cash costs, we're seeing reductions in cash costs for a couple of reasons that I'll come back to in a second. So where do we benchmark this operation? This is a database of the largest gold projects and mines in the U.S. So we're between the 3rd and 6th largest gold mine in the U.S. We've got the 7th largest reserve in the U.S. We've got the 4th highest grade open pit. So obviously a very significant asset. What does that do? It drives your operating costs way to the bottom end of the cost curve. And this is the PFS numbers. So these are going to go down from here for the reasons that I'm going to mention in a second. It is also a rare asset to be publicly available to invest in. This is a database or a slide that Northern Star put out when they did the Pogo acquisition. And what it really shows is the rarity of large-scale mines in good political jurisdictions. So there's only 18 mines producing more than 300,000 ounces a year in first world countries, and only 5 of those are in the U.S. So we'd be the 6th in the U.S. and the 19th in the first world. So a pretty rare asset to have control of. So where do we see value opportunities? They're really related to 2 areas. On the operating cost side, already touched on CapEx, but on OpEx, we've essentially optimized the processing circuit that you see here on the right. And I'm not going to go through the details, but there's sort of 5 bullet points on the left-hand side there. All of them are wins, so we've essentially seen improved recoveries, course of grind, various things like that all help push the operating cost of the project down. The other area we've been working on is also the resource and mine planning. So this is a bit of a hybrid slide. The resources you see in the pie charts there are the new updated resource from last year, but the square boxes with the reserves are the old reserve from the PFS. So the reserve does not reflect the changes in the resource yet. That's part of the feasibility study. The primary focus we had between PFS and feasibility study was converting inferred resource inside the reserve pits into indicated so we could use it. Because under 4311, you cannot use inferred. Therefore, you have to treat it as waste. Therefore, it has a negative NPV effect because you have to mine it to get at the rest of the ore. Obviously, converting from inferred to indicated, it now becomes ore, so you got a longer mine life, you got more ounces, but it also drops the strip ratio, which drops your operating costs. So that's one win. The second win, and that was primarily done at Yellow Pine, a little bit at Hanger Flats. The second win was related to doing some additional drilling in the Yellow Pine deposit. There was some high-grade drilling done in the very first 3 years of the mine plan, which had some very high-grade gold and antimony, but it just wasn't adequately drilled based on modern data to demonstrate that grade. So we did some infill drilling, and you can see the second bullet on the left. The impact of that is the gold grade went up 6% for the entire deposit and 22% in antimony. And that's going to flow through to the economics because that's the first tonnage we mine. Obviously, there's still inferred to go after in the other deposits and finish conversion of that. But since we won't be mining those until sort of years 7, 8, 9, 10, we'll get to that later and continue that conversion. There was a tremendous amount of exploration potential here, but since we started permitting, you can't change your project footprint during the permitting process. So we haven't been doing exploration for the last 3 years, but we're permitting as part of the permitting process to continue that exploration to expand the existing deposits, as well as to target as a priority some of the high-grade underground targets that are very close to the mill, and we're actually permitting access to the first of those deposits in the current permitting process. So where are we on permitting? So obviously the key driver and the key aspect of the permitting process is this is a brownfield site. This was mined extensively from the 20s through the 50s. During the Second World War, Korean War is the primary source of antimony and tungsten for the U.S. and had a material impact on the results of the Second World War. In a congressional hearing, the government stated that this mine took a year off the Second World War and saved 1 million American lives because of its contribution. So very significant. What was the consequence of that was environmental protections were not really forefront. And so there's large-scale impacts on site. The bottom photograph there is extensive tailings areas, basically tailings with high arsenic and antimony dumped right in the river valleys and is contaminating surface and groundwater. And then in the upper slide is a large-scale open pit, which is just behind those disturbed areas you see there, and all the waste rock cutting off salmon migration in the East Fork of the South Fork. So what are we going to do about it? We're going to take that pit that you see there, and we're going to turn it into the right. And so the restoration is a key component of getting the social license to move this project forward. And probably the best demonstration of that social license is this resolution that was passed by the House and the Senate in Idaho, where 104 out of 105 legislatures passed a resolution supporting the project to the federal government. Where are we in the process of moving that permitting forward? It's roughly a 4-year process. We're anticipating the draft EIS out to be out by the end of this year. Public comment in Q1 next year, final EIS out in Q3, and a final decision out by the end of next year. And the feasibility follows that draft EIS and comment period to make sure that anything in those that need to be addressed are addressed in the feasibility study. So we're roughly 15 months away from having a final decision, obviously assuming we continue to maintain the schedule. So we've got a large-scale, high-quality project in a good jurisdiction with very low operating costs. And we're well advanced on permitting, and feasibility is almost completed. Thank you very much.